Welcome back to We Here Now. I'm X. Let's get to it. So, I've been out for a while, um, but I'm getting back to it. I'm getting back to it. So we have a new thing starting, which is called the trading doctrine. I had a lot of people come to me, and of course, I went to other people as well, discussing if they knew anything about investing because I believe investing and trading is the way of life, the way of freedom. Yeah, just I believe everybody needs to know this. So, if you are following along, we will be basing this off the zero to trader trading curriculum that I sent out to many people, many people. So without further ado, let's get into it. So first video, which is this one, I'm going to call this one Trading Doctrine 1.0. So what trading actually is and why most beginners fail. Before you learn a single indicator, strategy, or chart pattern, you will need to understand one thing. Most people who don't Most people who try trading lose money. Just get that, just understand that now. You will lose money. Not because trading is impossible, but because they misunderstand what trading actually is. They confuse trading with investing or worse with gambling. And if you start to over and if you start with the wrong definition, everything else you learn will be built on a broken foundation. So, in this first lesson, I'm going to show you what trading actually is, what it is not, and the single mindset shift that separates professionals from beginners. So, this video is the first step in a structured trading curriculum designed to take someone from zero knowledge to a professional process. But here's something important. This phase is not about making money. That's a little bit down the road from now. First, we have to understand everything. This phase is about understanding the environment you're entering. Because trading is not a shortcut to money, it's a probability business with risk. Trading is all about risk. And well, trading and investing, everything in this in the finance world is about risk. And if you don't understand that now, the market will teach it to you later, the expensive way. Been there, done that. If you watch my earlier videos, I talked about that in some detail. So, trading versus investing versus gambling. Let's start with the biggest confusion. People think trading, investing, and gambling are the same thing. They are not. I repeat, they are not. And I will fight to keep that, you know, to say that. I will fight to say that. They operate on completely different principles. Investing is ownership. When someone buys shares of a company like Apple or Microsoft and holds them for years, they're investing in the long term growth of that company. The focus is fundamentals and time. Trading is different. Trading is the act of speculating on price movement over time using defined risk. There we go again. It's that risk. You're going to hear risk a lot. You're going to hear risk a lot. You are not focused on owning a company. You are focused on probability and timing. Now let's talk about gambling. Gambling happens when risk is undefined and decisions are emotional. A casino game has the mathematical edge built into it. Most people who approach trading emotionally turn it into gambling because you just don't know. Not because trading is gambling, but because they've removed the structure that makes trading a profitable business. So here's the simple breakdown: investing equals ownership and fundamentals, trading equals probability and timing, gambling equals emotion and undefined risk. So, why most traders fail? Now, here's where most beginners make their first mistake. They enter trading with the expectation of fast money, but trading doesn't reward excitement, it rewards discipline. And what I mean by that is that you literally have to do the same exact thing every single day. I have to stress that you have to do the same exact thing every single day. You got to. A professional does not approach the market thinking, how much money can I make today? They approach it thinking, is this the trade? Is this trade worth the risk I'm taking? That is a completely different mindset. Because the moment you understand trading correctly, you accept something most beginners struggle with. Losses are normal. Even the best traders in the world lose trades regularly. The difference is that professionals control the size of those losses. In other words, risk. If a trader risks, here we go again. If a trader risks $100 on every trade and wins slightly more than they lose over time, they can be profitable. The edge is not being right all the time. The edge is managing risk consistently. Introducing expectation, expectancy. Sorry about that. There is a concept in trading called I cannot speak today. There is a concept in trading called expectancy. Expectancy measures whether a strategy makes money over a large number of trades. And with this program, you guys will get that. I promise you that. The formula looks like this: win percentage times average win minus loss percentage times average loss. That means you can actually lose more trades than you win and still be profitable. Because trading is not about individual outcomes, it is about the sequence of outcomes over time. This is one of the most important ideas in this entire course. A single trade does not matter. What matters is the process repeated hundreds of times. If this, then that decision logic. So let's apply this to real thinking. If you feel excitement about making quick money, then your expectations are wrong. If a losing trade makes you feel like you failed, then you don't yet understand probability. But if you can accept the losses are simply part of executing a strategy, then you're thinking like a trader. This mental shift is what separates beginners from professionals. Common beginner traps. Here are three traps almost every beginner falls into. First, they focus on profit before processes. Me. Second, they take trades without defining their risk. Me. Third, they judge success based on a trade instead of a series of trades. Also me. These mistakes don't just slow progress, they destroy accounts. Also me. I've destroyed many accounts. Not that many, but many accounts. That's why the first phase of this curriculum is not about trading at all. It's about learning the environment, the rules, and the risks before real capital is ever involved. And this is basically how I did it to an extent. What I mean by that is that when I first started, I did dump money in. I did dump money in. Lost most of it, but yeah, I'm dump money in. I lost it. Let's just put it like that. But if I would have did it this way, I would have never lost all that money. I would have, stick to paper trading. Never mind. I'm getting too advanced. So where did I leave off on? All right, so that's basically it. So in the next lesson, we're going to break down something even more important: how markets actually move. Because contrary to what most people believe, indicators do not move markets. Buyers and sellers do. Understanding liquidity and market participation will completely change how you see price charts. So before moving to the next video, ask yourself one question: Am I approaching trading as a probability process or as a way to make quick money? Because the answer to that question will determine whether you succeed or fail in this field. I'm X. You've been watching We Here Now. If you want more information on this, please check the playlist. More videos will be uploaded regularly. I'll see you guys on the next one. Peace.